I hope you're all well. I certainly missed being with you last week. We had a public holiday here in South Africa, and we certainly enjoyed ourselves. So hopefully everyone's trading is going well. You know, I've just been having a look at my charts quite recently, or probably rather in the last month or so. You know, and I found something quite fascinating that as I prepare for my presentations with you, I have found that the way I'm looking at my charts, the way I'm looking at my charts is becoming a lot more revealing in terms of what I'm seeing on my charts. I've added a few small things which I will discuss with you just now. But what's happened now is I've scaled down one more time to just two charts that I'm looking at for the purposes of education, if I can say that, the things that I'm discussing with you. Because I found as I recap and review what I've been sharing, it may be quite a lot to process over 2-3 currency pairs. So I'll keep it to 2 for now. And it's the euro versus the dollar and the commodity gold. Now, here's something I want you to take a note of. Let's just have a look at euro versus dollar. What I've put on here is a line chart. Now, a line chart is based on closes, right? The close of the particular candle you're looking at. And here we're looking at the daily chart. Look at this line here right at the top that I've indicated. The high, that's HOY. Okay, that simply means high of last year. And C is based on closes. The reason I do that is that when I flip over to my candles, hey, John, how you doing? When I flip over to my candles, and if I'm not paying attention and I see that overshoot there, if I have a look at the label and I see a C, I know it's based on a close. Now, why would that be important? The most important price when looking at your analysis going left is the close of the last candle, because that's the price that the market agreed was a fair price. Okay, so it kind of just shows you what are the key levels to be looking at. So if I go back again to the line chart, euro versus the dollar, the high of 2020 is right here, based on closes. That's very important for you to keep note of. In 2020, what is the highest closing price? Because that's very significant. Every computer, every algorithm, every subjective price action trader, myself, will have that in mind. Okay, so please draw that in. Now, here's what you must avoid doing. Okay, avoid drawing a line on closes and then going over to candles or bar charts, whatever you're using, and drawing another line right there. It's just going to clutter your charts. If you prefer just drawing on candles, there you go. That's significant. That's the high that the price actually got to, not just the close. Okay. That also, you know, when you start to get within that range, you can start to refine things. So that will be perfect as well. But you can see it's a slight overshoot with the closes. So I put there for you because I tend to put these things in when I'm doing my analysis. Bang, there it is. I know where it is. I take it off. Sometimes I leave it on. But when we come to a particular presentation, sometimes it's not there. So in terms of teaching yourself how to trade as a price action trader, one recommendation, right? I don't know what time frames you're trading. Just try and reduce the number of charts you're looking at, and let's get very good at what you're looking at, because what we see here on the daily time frame will repeat itself on the 4 hourly, on the hourly, on the 5 minute. So now here's a question for you. If you just have a look at this, That's going back to June last year. That's what I've put. So we're talking a year. You gotta sit, grab a cup of coffee, quite beautiful, and say to yourself, what is happening on the chart in front of you? You've got to start to get these overall structures and patterns in your mind. It just comes by looking at the chart after chart after chart after chart. What's taking place right here in front of you. So here's something that's happening. You could look here, okay, and say, oh, okay, there is a high of the year so far, 2021, based on closes here. What else do I see going left? Oh, okay, there's a higher low here. Clearly, there's a higher low here. And what are some of the things that George has told us? Measured moves. Whenever you see a high or a low or a trading range, look at a possible measured move. You kind of say, well, if the market breaks beneath here, coming down, where is it likely to go? Well, measured move is down here, which will be pretty, close enough to create a higher low or possible test of the low so far, low close of 2021. Okay, so when you're seeing all of that, well, it's not surprising, right? The market can do whatever it wants, go back, move an average, come back, but you kind of know, there is a magnet, pull the market down, measured move, the market wants to get there. And if that was taking place when you're up there, you've got to kind of say to yourself, okay, I'll take a bit of profits off, try and leave a little bit on and see how far we go. Okay. What else do you see that's happening? Well, you kind of see this big, huge trading range, and if we come down here, you can start to do measured moves and say, oh, we might go down as far as that is concerned. You want to start to get pictures of things in your mind. I mean, if you were to look back here, okay, double bottom, bit of a higher low, double bottom, right up there. Now have a look at this. If you just went plonk and you measured up to there, and if you're down here, you'd say, well, listen, if the market goes up and breaks above this, it might get that far, or it did get that far. And how about this high here? Okay. Well, if I'm down here and the market breaks above here, it might get to measured move. And it gets there. And look how beautiful it gets there with these three pushes that we spoke about. Okay. It's a measured move. You just start to get these very simple things that you create in your mind. Look here as well. The three push pattern. Just start to get these things formed. Let your brain, what we're doing is changing the paradigms in terms of how we look at the charts. We want these things to just pop out at us. Okay? So just at a very high level. Today, I want to focus on one particular day. It was Thursday, the 3rd of June. I'll get to that. I wanted to get it done with you, I think, the Wednesday after the 3rd of June. Then my wife fell sick. I think I told you, then I couldn't make it. And then with this holiday, just carries on. But that's very significant. I want to show you some things. We'll drill down just to see how price speak to us. I just thought that actually makes sense. As price action traders, price speaks to us. Okay. Just a quick look at the question. How do I set up fibs so it works same as yours? Hey, there's no hassle, John. Guys, any questions you have, pop them in. Let's have a look at it. Okay. So there is a tool here. All right. That's what you want to click on. Click somewhere else. So that tool, Fibonacci retracement. You click on it. Okay, I'm just going to drag it here. Okay, everyone done that? Get your Fibonacci retracement, drag it down there, or rather make a note. Then double click on it. You get these three dots, whatever you call them. Right click. Then you get Fibo properties. Click on the Fibo properties. Okay. So common, that's just the color that's easy on your eyes. Blue, green, black, whatever, it doesn't matter. Then you want to go, so that's all you change in here. If you want it to look exactly like I have. So I use this dotted line so the thing is not cluttered. Okay. Don't click on anything else. So right now we can change that and let's make it red. If you just make it red and say, okay, see that dotted line changes to red. Okay, so leave that for now. Go back to Fibo. So right click on one of the dots. I just use the bottom one, Fibo properties. Then you go to Fibo levels. What you want to do with the Fibo levels, you want to delete everything, except the 0 level, 50, and the 100. Okay, and the delete is simply just click on something and place and hit delete, and it's gone. So you have 3 levels left: 0, 0, 0.5, that's level, 50, and then 1, which is 100. That's all that you want on the Fibo levels. Style is blue. Okay. Just hold on a second. Hold on a second. Sorry, guys. Put my phone on mute. Style, that's blue, so that I have a blue line there. Let me show you what that looks like. So if I was to click on that, you see the blue. So let's say we didn't want that to be blue. And let's put something that we can see. It depends also on the background you have, right? On the time frames, on the chart. So just change that. So now that's now black. Okay. Then you just keep these on these thin lines. Keep it on the thin line. That's what you want to do. Okay. Parameters. The only thing here, not to worry, don't put it on ray. Okay, if I click ray, it just shoots all the way to the right, and that clutters your chart. You want to have control over what's on your chart. So if you go back to Fibo properties and click on the ray, visualization, leave it on show on all time frames. Bang, that's it. Okay, so once you have that, you can delete it. If you come back and you're saying, well, okay, if I go from here and I get to that level there, you see that level, that's where you gotta put your midpoint. From here to there, equidistance measured moves that way. Don't worry about how the 0, 50, 100 looks, doesn't matter. Because if you're starting from here and you're going to here, just put your midpoint there. Because now you're going 0, 50, 100. So measured move is down here. A very, very useful tool. And while I'm at it, I just want to show the other tool, insert Fibonacci. See, there's our retracement. You could pull your expansion and put it up there, but there's expansion. That's the other one for leg 1 equals leg 2. Okay, expansion. Remember, you ever look at your chart and say, well, if I look at here, I think that could be actually one leg down. There's a pullback, there's a leg 2, or just from here as a first leg, market pulls back, or is it likely to go? So you start there. There's the leg 1. Okay, up to there. So leg 1 starts from here, ends there. Where does the pullback end? You gotta see where the pullback ends. Leg 1, pullback, leg 2 there. So the likely move is likely to go down there. Okay. Or we could say maybe this whole move here is leg 1. From here to down here is leg 1. And if leg 1 ends here, the market pulls back all the way to there. How far is it likely to go? It's likely to go here. So I'm going to start to try and take my profits somewhere in there. Now, the way you do that one, right click on the expansion tool, expansion properties. Let's start with common color. You choose the color that you want. Style, those dotted lines, because I just don't like to see solid lines. I get confused. Okay, Fibo levels, just one Fib level, just one. On this tool, just one Fibonacci expansion 100. That's all you need. Okay, Parameters, now this pop up. So all you really want is the common and the feeble levels. Parameters is where you've plunked your start, the end of your first leg and the pullback. Okay, then you have those two. Remember how powerful this is. So there is leg one, pullback, leg two. You can then overlay the other measured move two from that height to this low. Where is price likely to go? Over there. The lowest one, of course, is super duper profits. The one nearest is optimal profits. So if you don't want to be certain, either plunk your take profit in the middle there or just above that. Okay, very useful tools for price action, those two. Okay, excellent. All right, so that's just a quick look of what's happening on euro. So when you see that, if you trade in the daily time frame, I mean, your bias at this present moment is bearish, right? And you just want to find ways to get in, then you can then go back and say, oh, okay, this is fantastic. I mean, gee, look at this. Breakout candle, break beneath all of that. If you're not in the trade, don't worry about it. Never should worry about it. Okay, the bears are strong. We need follow through. There's a follow through candle. So I'm waiting for a pullback to the 10 EMA. Okay, if you thought, oh, I'm not going to worry, that's not quite a breakout for whatever reason. Anyway, for a break beneath this higher low, very significant. So there's a break beneath it. There's a follow through. All you're waiting for is a test of the 10 EMA, 2-bar reversal. Put your order beneath that, stop above there, and go for the measured move. Okay. So we're going to come and have a look on the 3rd of June. We'll look at this particular candle here. We'll get to just now. Let's have a look at gold using, again, that same kind of thinking. So you must play with this, when you get to your time frame, to your charts. I mean, look at some of the precision that you find here on this particular chart. Now remember, the chart could be anything. It could be popcorn. Popcorn. Friday night at my house, popcorn at movie night. It could be popcorn. It could be movies. It could be Netflix, actually. Doesn't matter. It could be gold. It could be euro. The chart is a chart. We just trade it. Just choose what you want to trade and just enjoy trading. I could give you a whole theoretical and sound and logical argument why you gotta trade the euro versus the dollar and gold versus the dollar, global trade, all of this fantastic stuff, But it really doesn't matter. Just choose something that that you love. I tell my friends I trade the euro versus the dollar and I trade the gold commodity. You know what I mean? It sounds cool. You might say I trade silver, because it's an upcoming commodity and I trade platinum, nickel, whatever, cell phones and moon travel. Whatever sounds cool, guys. Let's get the chart and trade it. By the way, you gotta enjoy yourself if you're a price action trader. Don't take it too serious. But look at the beauty of this. High of year 2021. Look at that high. Look at a perfect double top with this level here. Okay, look what kind of happened there. Right? Isn't that beautiful? Look at this double bottom there. Absolute beauty. I mean, if you saw that, all you gotta say is, give me a higher low. If you give me one here, I know it's a 40% chance, because I'm trading a major trend reversal. If you give me a higher low after a double bottom and it closed above the moving average, 60% chance of success. Take the trade, stop down here, measured move. How far is it likely to go? Okay, there to there. That's where you're gonna say, oh, maybe I can take that. That I should make money on. Take it all off if you want, or hang on a bit and say, okay, let's see if I can see something else. Leg one, that could be leg one, pull back leg two. Fibonacci expansion. So you could say that's the first leg. Remember, you haven't seen all of this beautiful stuff. So that's the first leg up to there. Market may, you gotta see the first leg and the pullback. First leg, pullback, bit of a let's have a look there. Okay, so you could have put an order above here, not get triggered, which I particularly dislike because I usually take off my orders when you get this, when you take a trade and you're down here. But 40% chance, leave it there if you want. It's a 40% chance because it's not triggered. But if it moves your way. Okay, remember probabilities. You don't know when the bus is going to come, but they're going to come, right? So you could have taken a trade there, taken some profits out here, and if you're taking some profits out here, I mean, look at that. Look at that. I mean, that's El Clasico. I told you about that. Yeah, off the moving average, breakout, follow through. I got a confirmed breakout, got to wait for the pullback to the 10 EMA, pullback to the 10 EMA, beautiful reversal candle. I mean, if you don't take this, this is one that I call my 10-year-old daughter and say, listen, Dad, I say to you, whenever you see a breakout, two green candles, and it comes back to this dotted line and it's like this, just press the order. Can tell me when I come back from work. But Dad, I placed an order for oranges at this level. I put my stop here. I'm going to see what's going to happen. You make money, guys. See? That would be an absolute beauty. I'm now having fun with you guys. We've covered a lot, so I think now we can just stop trading it. Oh, by the way, before I forget, I've asked the guys at the office, Angel and the crew, and maybe you guys can help me. You know, I'm trying to think, and it has to be approved by Paul and the guys at the offices, so it's still concept, still idea. When we have this show, it's a 1 hour show, you know, almost at the open of the European session, man, if something sets up, we'll take it, but it's going to be pretty difficult to kind of give you an overview, a framework, get a trade, etc. I'm thinking at least once a quarter, subject to the approval of PB. Okay, underline that. It's going to be approved by Paul. I'm thinking that if I find out how you guys trade, I'm going to find either a session where most of the traders are in. It could be the Asian session, or it could be this European London session, it could be the American session, where we can have a longer period, 4 hours of looking for trades together. It could be a whole session, 8 hours, you know, and when I get into my trading mode, I can trade all 3 sessions. So it depends what works for you guys. But give feedback to the office and say, typically, you know, this is kind of where I trade. You know, like yeah, John, UK and USA sessions, fantastic. You know, give feedback to the team. They'll run through everything that everyone is saying, and I'm prepared, just as part of what you're doing, to give you guys at least once a quarter, you know, a full session or a 4 hour session. It might be boring, you know, because if this is the 5-minute chart, and I kind of say, okay, you know, market is 10 here, let's see if we get a double bottom. I mean, we might wait an hour for this to happen. So I'll be muted, doing something else, checking the charts, maybe showing you something different, answering questions. Then you say, oh man, we got a double bottom. Let's wait and see if we get a higher low. So that might be another hour before we get there, and then take a trade. You know, but if we have 4 hours or 8 hours, whatever, and we're popping out, it might actually be proper trading. And I want to jump into that. So that's, you know, I'm gonna, you know, Kuala Lumpur, 100% includes excellent. So guys, that's a bit of homework for you. Chat with Angel, chat with the guys. You know, once Paul agrees, you know, let's try and do something this coming quarter, July, August, September. Find a day. We don't know what's going to happen on the day, but remember, it never flat lines. So there will be opportunities for us to trade, and then we'll trade. You know, I'll scale down my risk parameters and we trade, so that, you know, we're all comfortable with what to do. Trade a quarter, trade a 0.5%, whatever it may be, and let's learn. Okay, so that's, you know, that's the kind of trade that, you know, you teach your kid just to place the order while you're on holiday and see what happens. Okay, so you got that. So you could see exactly. So I said you could say that's leg 1, pullback leg 2, and you could take some profits there. when the market gets there, and if you've missed all of this, do not worry about it. You still come back, and you kind of say, well, maybe that actually could be leg one, because remember, a move, market moves in two moves, leg one to leg two, there's another leg. So maybe this whole move here is a larger leg one, which is subdivided into two parts, into leg one, leg two. So that could be leg one, which means when I get the second leg, there might be two parts to it as well. Where's mine? Okay, so that's leg one. There's my pullback. So maybe the market might get to that level again with two moves on its own. You understand? So leg one, pullback. That leg one had two parts to it, leg one, pullback, leg two. So maybe the second leg might have two parts, leg one, and there you go, leg two. So you can see coming here, take your trade, but your stop is going way down here, and look to take your profits somewhere there. Okay, so these kind of views you can do on any time frame. But do it on a large enough time frame so you can start to kind of have a look and see what's happening. Now, what I want to do, I want to go to, still on our daily chart. Let's go to the 3rd of June. It was a Thursday, which it was a day after we had one of our sessions. And I was like, man, this really, did I do that? That's really great for the guys. Okay, so that's the day we're going to look at that day, 3rd of June. Okay, so that red line, that's the low of that particular day, right? And up there is the high of the day. So we're going to look at that day. But in order for us to make sense of it, remember it would have unfolded before we saw all of this. So I'm just going to kind of move the green line to the high of the previous day. So you'd have done your early morning analysis, or your beginning of day analysis. So your previous day, remember you always have to mark previous day's high, previous day's low. That's where you'll be. And I'm just going to save a bit of time. Of course, you need to be precise. So you need to go in and kind of be precise with these things. But your open of the day will be right here. Okay, day open went down, there's trade maybe, or went up, whichever way opened first. Eventually it went up and closed on its side. So that's the high of it. So let's go and find the 3rd of June on the 5-minute time frame. When I'm doing these things, I'm always sure there's a smarter way to do this, but I haven't figured it out yet. So let's do it old school. Scroll back. So I remember I was once in a training session with Paul. I told you he was one of my early coaches. So he was, as a coach, he teaches you all things. I don't know what he was showing us, some clever indicator of sort. And you had to be so clever to plug it in. So one person in the room said, hey, Paul, what happens if I don't have that indicator, or if I can't plug it in? And he says, you use your eyes. I thought that was classic. That was before I even learned about price action trading. So we use our eyes. That's old school. If you can take everything I'm talking to you about it and plug it into an algorithm, man, it will be such a beauty. But until then, let's use our eyes. Okay. So I wanted to tell you something funny, but I'm trying to get to be a little bit serious. I'll make a note of it. So you wake up in the morning and you are here. Okay. So we kind of start, we just keep the whole, it's not quite the whole day. Okay, that's the whole day. High of yesterday, low of yesterday. Okay, so wherever you've come in, you would have had to mark the high of yesterday and the low of yesterday. And the market is starting way up here, kind of goes sideways. And the moment you see any sense of, well, it's looking like that, and you kind of say, well, what exactly is happening here? You always have to just quickly look left. You've got the high of yesterday in any case, and you see that high and that low at the close of the US session. With price action trading, you don't get paid for sitting, right? You get paid for being busy. That's part of the fun that we have. High, low, of what you've seen on the left before you cross the road. You say, well, I'm not going to trade in the middle of that. Okay, I want to see what happens if we break beneath that or break above that. So if we break beneath that, market is likely to come down here. Okay, let's see how it breaks out. If it gives me breakout candle, follow through, pull back to the EMA, I don't know, 4 pips stop, whatever it may be, I'll take it, but that's an area of interest. It goes above here, it's gonna get here, and whether it gives me an entry breakout, pull back, test, I'll do it, or maybe it's just one big candle, I'm just gonna say, well, that's where you're gonna go anyway, a higher probability. The certainty in price action trading is 60-40. Reckon 60-40. The beauty about it is if you start to put things together, your 60-40 increases, 70-30, 80-20. You keep yourself on 60-40, you don't get disappointed because you get surprised by all these good moves. Okay. So, and you're still waiting to see what happens. Attempt to break out, fails. You gotta wait for the candles to close. You have to wait for the candles to close. I lost a lot of money in my development stage. I said, oh, look at this, it's happening. Boom, traded the market and goes against you. You can't think, you panic, things go wrong. You lose money by the time you recover and you stop questioning yourself. It's like, oh man, look at that. Oh, what happened? Just wait for things to become clear. They will become clear. They may become clear at the end of the session, but if you take that trade to make money, they may become clear tomorrow. Okay, but when you take a clear trade, you will make good money. So price action traders are slow for things to form, and then they're quick to execute when things form. So once it's set up, you can't doubt yourself now. You gotta just say 60-40 if it's going my direction. If I'm trading a major trend reversal, trying to catch a big move, 40-60, so I'll get stopped out more often. But if I catch a move, it's gonna go my way. Just execute. But don't start off by just executing without waiting, because then you're gonna get into a bit of a funk within yourself. Okay. So try to break out, failed. What does that mean? Try to break out, failed. Little double top, open the base, do something, inside candle, went sideways. Inside, breakout mode, there was a doji. So someone's gonna break out, try to break out, failed. Inside candle, another breakout mode. You've got to be thinking. You really have to tell yourself, think. I always say to my daughter, the problem is that you are smart like your mom. Only problem is you don't think like your dad. Your dad is too lazy to think, get yourself into trouble. Just use the brain and think. That's all you gotta do. So when you see this as a price action trader, don't just look at it and say noise. There is no noise as a price action trader. There is information. There is always information. The market is telling you something. Why are we failing to break out above that? Okay. I gotta tell you something, John, So my wife says to me, oh, you're the academic, because of the the doctoral degree I did in leadership. So I love reading. I can stay up all night. So now I want you to teach your daughter how to read. And she was young. I said, what do you mean? She said, no, I love movies and, but I want my daughter to be like you, learn how to read, just enjoy. So we taught her how to read. And I mean, not ABC. She learned pretty early, but, picture books. So by 3, she could read a book. I mean, now she's 10, she's read all the Roald Dahl series. We put them into Michael Mafugo. She just loves to read. So we read in the car every day. She reads to me, and I'm correcting pronunciations, all sorts of things. 30 minutes each way. But sometimes, bad parenting habits kick in. Like today, I just say to her, listen, you're not reading to me. I want to teach you how to sing. And she laughs because my wife is a musician. She's in the worship team at church. She said, but Dad, you can't sing. I said, don't worry, we'll put the volume up. But you're going to sing all the way to school. One song. And he said, but I don't know the words. I said, don't worry, I've taken a screenshot for it. So I had her singing Eddie Grant, I don't want to dance. Okay, I won't bore you guys. But we sang all the way to school today. So 7 or 8 times it repeated. So just messed up her brain. But that's beautiful parenting. You can't always be serious. So when you look at this, the market is telling you something, guys. You gotta think, what are you trying to tell me? It's trying to tell me that the bulls have an opportunity, but they're not strong enough. That's the information. Chances to break out, they are failing. Eventually, they have this huge bull candle which completely collapses. Confirmation, the bulls are weak, the bears are strong. Let's see how strong the bears really are. Oh my goodness, disappointed. Why can't the bears just follow this up after all of this? But sideways, but the close beneath the moving average. What happens next? Another candle. Well, close beneath the moving average. Inside. I'm not going to take it because we're right in the middle of that trading range. But the bears are beginning to tell me a story. They got strength. Okay, follow through. Break beneath that low. Good. Give me follow through. Come on, guys. When I give me follow through, at least give me a strong candle. But anyway, in any case, still bears control the market. Control the market. Decent enough candle. But look where we get into. We get into our measured move area. Okay, but bears are still in control. We're going downwards. So I'm waiting. I've got to get a good setup. I am waiting for my setup. Sideways, beneath the moving average. That's a 10 moving average, which I use to track. John, please don't measure my issue. You can play I'll play the instrument. The singing is, but she learned Eddie Grant. Thanks for that. You're going sideways, but I mean, it's information, guys, bar by bar craft. That's what we've been longing to get to these 4 months. Now we're starting to see the picture. Hanging beneath, testing the 10 moving average, which we use to indicate the strength. It is still bear breakout. Okay, the bear is still closed, very weak, but the bulls are not strong enough to neutralize it. So that's why they really can't close above the 10 moving average. They're hanging beneath the 20 moving average. More information about the bear. And the bulls attempt to get into the trade. We get a decent enough reversal. We put our order beneath here. We may have been triggered in or not. Let's assume we were triggered into our trade and we are so happy we're in. We see that candle, we've got our stop here, boom, we get stopped out. What do we do? Get a cup of coffee and say, man, bugger, when will George tell us which probabilities, when do the probabilities come in? 60-40, why, guys, why don't we get the first successful ones first? You never know. 60-40 out of 10 trades, you will win 6, lose 4. You don't know when they're going to come. So, boom, first loss of the day. Man, don't run away. Okay, probabilities, park it, forget about it, it's gone. Do not go back and worry about any trades you've lost based on strategy. We covered that in one of the sessions. Still look at it. Your thesis is still correct. It's absolutely correct. You got stopped out. Okay, bang. Because I'm assuming it got triggered here. Okay, if you didn't get triggered here and market went like that, you take off your trade, it comes back like this, you can take it, you leave it and wait until the next move. But you got stopped out. The thesis is correct. That is as strong bear breakout as you can ever get. Because at some stage, it was bullish all the way here. The bears were strong enough to turn the market after stopping you out. Listen, there's no one out to get you. The sooner you learn that, the better. Just price action. There's no one waiting there, trying to hunt you down or kill you down. It's probabilities. Okay, if I don't believe in stop hunting, because if stop hunting was correct, we'll just put a wider stop on it, right? Correct. Measured move about here, boom, put it up here. They never get stopped out. That's not the way to trade. It's probabilities. It's out. It's gone. Then you wait to see, okay, strong bear breakout. Now I'm really excited with the bears. Market comes back, reversal of the 10 moving average, put an order beneath here, but your stop goes up here. That's the correct technical position. Put your stop up there, and where are you trying to go? There's your entry. Okay. Measured move of your entry, but the correct one is the measured move of the breakout. There's the breakout, the market goes beneath that selected go there. Eventually got there. Okay. But by that time, maybe you've taken your profit. But let's look at what you got here. So there's an entry you'd have taken and held onto it. Now, where would you take your profit? So there is the length of the breakout. Okay, so that's the super profits down here. But remember again, I've told you where you gotta find optimal place to take your profits. Fibonacci expansion. There's leg one. That's the first leg. And what you are trading after the pullback. Okay, there's the first leg. There's a pullback, and your entry is there. So there is conservative profits. Higher probability, you take that trade, 60%, you're going to make money. But because, you can't awaken everything out smartly, maybe more. So that's 26 pips. If you were to put your profits there, that's about 2/3 of the profit. That's fantastic. If you went for the full profits, of course, that's over 1-to-1. If you went midpoint, might be 0.75% or whatever the risk parameter is. Okay, so you're in a trade there. You're not trying to recover the money that you've lost, guys. Probably once it's gone, it's part of the game. That's a game we play. There's no 100%. It's called cost of sales. We are selling gold here. We've got to buy gold, but there's a cost to the gold. Okay, and that's part of it. What's gone is cost of sales. You can't have a business without the cost of sales. So we just work to make our profit. Take that trade, boom. If for any reason you did not take that trade, okay, and you're waiting, you say, okay, I want to wait. I need a little bit more information. I need these outliers, these tails here. I think I spoke to you before. These tails, call them outliers. It's just one huge tail. They call it an outlier. It's not giving me clarity in terms of what to do. Pop in your closes. Closes are very important. You see what else you're getting. Well, you would have had that. Okay, remember you don't have that as yet. You don't want to take that from me saying I just need a little bit more certainty, before I take my trade. I want to go from 60% to 65% or 65, 35, 70, 30, whatever. It's all fine. It's all fine, You pop back again and you say, okay. Market started here, that was a high close, it turned, that's a lower close. So George said, I need to see the setup. There is a lower high, okay, double top. It's a double top, it's not a perfect one, it's a lower high, a double top. If I then get a turn here, a test here, I'll take the trade. Not I'll think about it, or maybe I'll take the trade. I gotta take the trade. I'm a price action trader, I'm not gonna sit here all day. and nothing happened. If it's not happening, it's not. But if it's happening, gotta take a trade. Okay. So put your entry beneath here. You gotta, if you haven't taken this, guys, you gotta put your entry beneath here. Stop goes up here. Now, those highs and those lows and those tails are important because they give you a technical point to place your stop. Stop always has to be at a technical level, the extreme that you can see. It's a bit of a double top here. Okay. Please, whatever you do, use your closes to see what's happening on the chart. Do not place your stop at the close. It's not a technical level for placing stops. Okay, plonk the whole clear chart in, put your stop up there. Okay, and now you say to yourself, okay, entry, stop. Where is the market likely to go? Well, this one is still the same. Okay, you can then say, okay, now I kind of have a bit of a trading range there. Okay, because I got these two touches, I got a low, so that's the trading range based on the closes. Now you're taking that trade. Okay, I'm basing it that high, that high. If market breaks beneath that, it's likely to go down here. Okay, so you gotta take a trade, guys. You just have to take a trade. If you don't take that one for whatever reason, and I don't know why, but if you don't take that one, you've seen all of this price action. When you see that again, I mean, the market is saying, please, these are El Clasicos. You've got to take this. Now you have a double top. If you didn't take that one because you want more conviction to the double top, then you get a lower high. You got to take a trade. Again, you decide where to take your profits. There, most conservative, there to there, there's a measured move. There to here. You see how we're kind of getting, let's call it a cluster if you like. Getting a cluster of measured moves in this kind of zone. That's all profit taking zone. There's gonna be someone taking profits there. George, algorithm 1, algorithm 2, we have a John is gonna take one there, Ramona is gonna take one there. Someone's gonna be taking profits there. That means the level of support that we're heading towards. The other thing we spoke about, guys, is how to build positions. Now, I do this. So if you've taken that trade, if you kind of looked at it and said, okay, I like it, etc., but I'm going 0.25%, or I'm going 0.5%, my maximum risk per cluster, call it that way. This is all a cluster. You don't have to take all of these 1, 2, 3, 4. You don't have to take one. Okay, but all of these are kind of one setup. So if you put 0.25, okay, and because you got stopped out here and you say, can I put 0.25 or 0.5? Then you see this again, put your other 0.25 in up to 0.5. Okay, you gotta take a trade. And if you're working on 0.25, when you see this, put it in. It's up to you guys, but don't go put 1%, 2%, 3%. Now you're getting way out of your comfort zone. But you can build a position there. And decide where to take your profits. What I like to do if I'm in the market, I've got my clusters here. I leave my take profit at 0. Okay? Because I use a multi-account manager. You can close all of your trades. I want to watch and see what happens here. Okay, I start to see, okay, that's happening. I'm not surprised here because the bulls can see it. They know profit is taking place. Profit taking is taking place here. Okay? When bears are taking profits, what happens? They are buying back the shorts. So at that present moment in time, the bears that are taking profits are bullish, right? They are buying back the shorts. And bulls are also trying to initiate reversals there. So I get all of these tails. That's what's happening. Okay, it's not noise. The market is telling you information, very key levels here. So I just kind of wait and because it could just turn and profit is gone. Why? Because I haven't seen I haven't seen any. If I did a strong candle here and they follow through and then pull back, the market starts to go down again, I could pull all my stops down. So at this stage, my stops are still way up here. But in any case, you're observing all of this, and you keep watching your 10, keep watching your 20. I mean, have a look at it. There is no close above the 20 moving average for a long time. That is showing strength by the bears and weakness by the bulls. Then you get this and you say, yes, 60% chance marks, and I keep going. I'm glad I remained in there. And now I have a breakout beneath that, and I have the market pulling back. I can pull all my stops and put them here. Okay, why here? Because if I initiate a trade, that's where I put my stops. So I protected all that profit. And now I'm just going to stay with the market. Okay, because there's a huge magnet down here. What is that huge magnet? Well, that huge magnet is yesterday's low. Okay, the bears can see it. The bulls can see it. You know, the bears want to keep selling, say, if we can get there, we're going to optimize all our profits. The bulls want to fight it. Okay, so they don't want the bears to break beneath yesterday's low and end up with a close for the day and make the whole thing bearish. So you've got to observe that. But now, that was your open of the day. But you see in all of this, that's when you just take a trade now. Put the trade beneath here, stop is up here. If you haven't been in the market and you've been waiting, gotta jump into the trade right here. Okay, and you kind of ask yourself, same old story. What is likely to happen? You could start off there and say, well, if the market goes beneath that and I get there, boom, okay, what happens? You're not surprised because you know how these things work now. Okay, maybe all of this you kind of say because of it's all hanging beneath the 10 moving average, which we use to indicate strength. Maybe that's all a leg one. Okay, so just letting this thing go, just wait and wait and wait. So maybe all of this up to when the market starts to go sideways, going sideways in there. So I'm assuming, you're back from work or if you haven't gone to work and you can stay in the market. There's nothing there that can convince you to come out of any trades yet. If we had a close above the 20 moving average, we are now into major trend reversals. Remember, major trend reversal. Let it break off the moving average, create a new lower high, come back and retest, then you can start to think again. But so far, you are building a position or you're initiating trades. Okay, keep your stop up here. All of this could now be a leg one, and maybe the market will get down there, just went sideways. And then just watching my time. Went sideways and into the US session. Can you believe it? So here's some of the things that we kind of see. So we come in around here somewhere, European session, and you've missed all of this beautiful money there that's taking place in the Asian session. And if only going to trade the European London session, go, you just say and look at the market, it's going sideways, what can I do? And George said if you see price going sideways, kind of just draw a rectangle. I'm not going to do anything until I get there. You sit and you watch, because you're not in that price action, you just kind of waiting. Eventually it's breaking down here, and then you say to yourself, oh my goodness, it's the US session, what do I do? Well, it's beautiful because you open the US session, huge volumes. Look to the left, look where the market started. Okay, opportunities for you. You got to find ways to get in. That's where you put your stop up there. Okay, you don't want to trade the breakout, just where there's a pullback to 10 moving average. Entry, stop where above here or down there. Let's see how far it goes. Okay, that's if you've come to the US European session. But if you've been tracking it, which you ought to be doing, even if you come into this session, go back and see what happened before. You've seen all of this. And you're going to say, okay, hang on a second. Market has been bearish. We did break beneath yesterday's low. We did close beneath it. Bulls fought back. The obvious place of fighting. Bulls want to reassert strength to break above the moving average. Going to give us 1, 2 candles, come back, double bottom, and take it and take off. The bears want to maintain momentum, and the bears do that. Okay, we don't have a clear break of a trend line. We've got a trading range that's been formed here. Okay, when we talk a major trend reversal, we want to see a break above this trend line, not going sideways. Eventually it does break, but when I clearly see bullish strength 1, 2, 3, then of course you want to expect market come back, create a double bottom, and give you a high low. This is not a major trend reversal. Why? Because we're not breaking the trend line. We're going sideways along it. Okay, it's an area of agreement. At that point, the market is agreed that that's the price that you need to get to. But if you're in the market here, my point is, you've seen that. Okay, that's a lower high. We've gone sideways. Didn't quite break the moving average. We then get this. What do we have, guys? We have a double top in a bear trend. Okay, trading range but double top. So all you want to wait is, can I get a lower high to get into this market? Okay, because if I do, my stop has to be above here. This what else is interesting. This horizontal level we got here indicates the open of the day. So that's a key level. Why is it key? Because it's where the market opened. And if you are a bull, you just want to put the price above that to say, hey, we're strong enough to just break above the open, so maybe we could go higher. If you are a bear, you want the price to remain that's where the price open. It ain't gonna go above that. That's taking place here. Then you just want to wait to get a lower high. So in here, you're not going to trade. You're saying, okay, I can see it, but it's at the bottom of that trading range. But that's important. If I start to break beneath here and get a pullback, I'm going to take a trade. Entry, stop above here or above there. Let's see how far we go. And that's how far we went. Guys, I got to stop. But here's how I think you can learn. Go onto the Euro dollar. Do the line chart analysis. We spoke about that. Okay. Then you want to go and find this day, 3rd of June. Go down to the 5-minute time frame. Just take your time. Spend a day or two. Don't do anything else. Just work through this and let the price speak to you. Your skills are going to improve. Really improve. So guys, thank you very much. Thanks. Thanks for the feedback, John. Guys, remember, please, over the next few weeks, let's give feedback to the office. And let's try and see if we can find a day to do at least 4 hours, right? I'm always in the market, but at least let's try and 4 hours. We'll leave it all open for the day, and you can pop in from the office. You know, they create a link for us and see what you've picked up as trades, so we can have a productive day of price action trading. I've thoroughly enjoyed it, and we will catch up. Back to Angel at the office. Thank you, guys. Have a good week of trading, and chat next week.